first, I want to start with a history lesson, because the last time the U.S. designated another country a currency manipulator was in the 1990s during the Clinton administration. It was China then, too. I realize you became Treasury Secretary later in President Clinton's tenure, but why did it happen then, and how does this time around compare to that?
It happened then because China was intervening in the currency markets in large quantity to push the value of its currency down. And as a consequence of that very low, artificially manipulated currency, it was running a very large surplus with the rest of the global economy. Today, China is intervening in currency markets to prop up its exchange rate, not to push it down, and it is in balance with the rest of the world, unlike Germany, unlike Japan, unlike many other countries that are in substantial surplus. So both elements of manipulation, pushing your currency down and running a substantial surplus, are not present in the case of China today. You know, I don't understand what economics textbooks or what data the administration looks at. What Larry Kudlow just said when he asserted that China was not nearly the economic power that it was 20 years ago may be the most ludicrous economic statement I've ever heard a public official make. China's economy is approximately 7 times as large as it was 20 years ago. China's growth rate over the last 20 years has exceeded that of the United States by a factor of about 3 or 4. China has economic challenges now, but to assert that China is not as strong an economy as it was 20 years ago is not to be living on this planet.
Larry Kudlow also said that China is clearly getting the worst of this trade battle. We just had Wei Jianshan on saying that's not the case, that the U.S. is getting the worst of it. Does it matter who's right?
I don't think so. China, I don't know why we would want to launch into a big negative sum game and take our solace only from the fact that China might be being hurt worse than we're being hurt. I thought the idea of American economic policy was to make America better off, not to make others worse off. You know, whether the sadism in your policy exceeds the masochism in your policy doesn't seem like the right test. It's enough to say that something's wrong to agree that your policy is masochistic.
Larry, you tweeted earlier that we may well be at the most dangerous financial moment since 2009. By saying that, do you expect, therefore, a major recession, major house price crash, or something equivalent within the next 6 months or so?
I think I said we may be at the moment of greatest risk. I didn't mean to suggest that I think it's likely that we're going to see another version of 2009, just that the risks are greater than they have been, than what they've been through the recession, through the post-recession period. I think if things continue on the current path with major volatility injected every several weeks by some American action, you're certainly getting close to a 50-50 risk of recession over the next year or year and a half.
Larry,
that doesn't mean it has to happen, but that's the risk.
Yeah, Larry, this op-ed you just published that by naming China a currency manipulator, Mnuchin has damaged his credibility. Why do you believe that? What's your argument there?
because there's an established understanding of what's involved in currency manipulation. It's intervening in the market to push your currency down. China is not doing that. It's intervening in the market to hold its currency up.
So how do you see
running
so
a
Larry,
substantial surplus, and China's not doing that either. So it's just saying things that are not rooted in facts. And it seems to me that when you hold an office where credibility is very important, it's very important that your statements and claims be grounded in fact and analysis rather than grounded in following your boss's latest tweet.
Yeah. So Larry, how do you see what did happen with the yuan and the fact that the PBOC coming into the start of this trading week basically stepped back and let it, weaken past that $7 to dollar ratio, that key level? Do you see it as capitulation or do you see it as provocation? And I ask because both of those scenarios seem like they could have big implications for the markets, certainly spooked the markets with the moves we saw yesterday.
I think I see it as allowing markets to adjust naturally, and which often is what the United States is asking China to do, and it's not artificially intervening to prop up the market. That would be how I would see what China has done. Or to put the point a different way, look at any country, and if there's some major adverse shock to its ability to export, there'll be a tendency for its currency to go down. And the United States administered a major shock to China's capacity to export. So I'm not sure why we should be surprised when its currency goes down.
Larry, you agreed with the recent 25 basis point rate cut. How inefficient, though, is that at offsetting the issues caused by the trade war? And when you see such big moves in the long end of the yield curve over the last couple of days, does it make you think we need to see many more cuts in order to steepen that curve again?
I think that the risks right now are much more on the side of economic slowdown than they are of a heating up of the economy. I worry that part of what we may be seeing is a market judgment that, exactly as you say, monetary policy may not be so effective in stimulating the economy, and therefore there's going to be a lot of pressure to keep pushing, because when you're, to some extent, pushing on a string, it's not that efficacious. And I think the nature of the adverse shock that is being administered with this big increase in uncertainty is probably one that can be only counteracted to a limited extent by monetary policy. That doesn't mean it's not worth making the attempt, but it means that one should not be complacent that the Fed's going to be able to keep things under control no matter what happens.